Hi, everyone. Welcome to another episode of the LATAM Stocks Podcast. I'm your host, Patrick Flood. Today, I'm speaking with Esteban Arroyo. Esteban is the treasurer of Banco Pichincha, the largest private bank in Ecuador. Until recently, he was their head of capital markets also. So I can't think of anyone better to talk to about finance and investing in Ecuador. There are a ton of questions for Esteban about Ecuador's economy, the banking industry, dollarization, and we have a ton of ground to cover. So let's get right into it. Hi, Esteban. How are you?
Hi, Patrick. Thanks for having me. Yeah, very excited about all the changes that we have seen in the bank that I was commenting with you before. And happy to be here to talk about Ecuador and its economy and the bank as well.
Yeah, I'm really excited too. And thank you so much for doing this. So let's get right into it. So tell me a little bit more about yourself first. Where are you from? Where'd you study? And then tell me about, the new role you just took over at Banco Pichincha and a little more about the bank.
Sure, absolutely. Thank you. So, well, born and raised in Ecuador, spent a couple of years when I was a child in Mexico because my parents were doing their doctoral degree in medicine and orthodontics. So then I've been living here in Ecuador for most of my life. I spent a couple of years in Germany studying as well, and also in the US when I completed my master's degree, which I can talk later about that a little bit. And I spent also some time working in Peru and Colombia when I was working at Citibank. But most of the years, I have had some exposure to some countries offshore, but most of the years I've been living in Ecuador.
Great. And currently you're at Banco Pichincha. So you just took over as the treasurer. So when we met and we planned this conversation, you were the head of capital markets, and now you've taken on the role at treasurer. So can you maybe just tell listeners a little bit more about the bank and then, your new role at the bank?
Sure. I think so. I'm going to comment briefly on what has been going with my career in the last year. So I started when I graduated from undergrad in economics, which I completed here in Ecuador and partially in Germany. I started working at a brokerage house, which is called Analytica, it still exists. And I was doing more economic analysis and research for the securitization processes of the brokerage house and also to support some of the M&A analysis. So industry analysis, economic analysis, that was more of my role. That's where I started. And then when I ended my 3-year term around that, working at Analytica, I did my master's degree with a Fulbright scholarship in the US. I went to Vanderbilt. It was between 2009 and 2011. And based on the Fulbright scholarship, you need to go back to your home country. And when I got back here, I started working at a M&A boutique, doing as a senior associate to doing M&A advisory, a ton of valuation models for companies of different sectors. I worked there for a year and a half, and then I was called by Citibank, the local branch in Ecuador, because they have an opening position in the treasury. And that's what I moved from more corporate finance role to markets a little bit, but it was more focused on solutions to clients. So I started working, and I worked at Citibank, the local branch, between 2012, 2018, doing FX and structure solutions for customers in the FX world, interest rates and commodities as well. Even though there are not a lot of or tons of clients in Ecuador doing that, this was I would say, the unique house that was providing these solutions to Ecuadorian customers. So I was very excited which was a unique opportunity when you're living in Ecuador. And then in 2015 and then 2018, I had international assignments. The first one was in Peru, working the structuring team in Peru, in Lima. And then 2018, I moved for almost 6 months to Bogota and was corporate clients in Bogota, in Medellin, doing again FX solutions with Colombian peso and also a couple of things related to interest rates. So that was almost a 6-year period window where I was doing more as a product specialist, but also, a product that requires a lot of skills, a lot of learning, keep up with the market and learning how to deal with customers, sophisticated customers. Then by mid-2018, there was an opening to manage the whole capital markets of the largest bank of Ecuador, which was Banco Pichincha. So I decided to transition and to move to Banco Pichincha, where my responsibilities expanded from, the FX world and client solutions to cover that as well, but also international funding for the bank and everything related to markets. Any transaction under ISDA, any transaction that relates to cover the interest rate risk or FX risk related to the subsidiaries of the group of Banco Pichincha. And that was also that required as well to manage a group of 6 people, which I didn't have before. I was more like a product specialist. So, expansion of what I was doing before, but also learning new things and also executing new stuff. And I've been working Banco Pichincha for almost 6 years, 5 years, 10 months now, 9 months now. And yeah, as you just mentioned, 2 weeks ago, I think was right after we had our first conversation, I was promoted to treasurer of the bank in Marquesquet. So basically what I do now is I oversee the capital markets division as well as the local liquidity desk and also the economic and analytics team, which is the one that is in charge of doing all the forecasts of GDP, of deposits, of loans, shocks to the economy, what do we expect to happen in the next couple of months, and use that as input to use for the budget of the bank. So that's a important, I would say, promotion to me, and I'm, catching up and doing as fast as possible so that the learning curve is shorter and to deliver net value to the bank. So that's where I'm now.
Yeah, so it sounds like now you have a lot more. Right now you have the economic research for the economy. You still have the capital markets, but you also have the bank's balance sheet to worry about.
That's correct. And I would say that's the core, the core function of the treasury. That's the first thing that you need to protect, the first thing you need to learn and to understand and follow very closely, because you need to be able to comply with the required regulation with the specific indicators, liquidity indicators, and other requirements by the local authorities, in addition to provide the price of that funding to the asset side. That ALM process needs to be in place as well. So that's the core part of the bank. And then you have also the other businesses, solutions, international financings, economic analysis, etc. So it's a very, I would say, complex, very interesting role, and very strategic, because you need to have important discussions with the business side. You need to have discussions with the finance guys to understand where the specific issues are in the balance sheet and how you can help and accommodate the liquidity of the bank to provide to the funding that is required in order to allocate that to specific loans or specific products of the bank.
Yeah, it's really interesting. And I want to ask you a lot more about Banco Pichincha, because I think it's so uniquely positioned in a dollarized economy, not just regionally, but globally. I mean, you guys are the biggest bank in a dollarized economy. But before we do, maybe we should just level set for listeners. And can you just tell me maybe what is going on with Ecuador's economy right now? Just in general terms, good, bad. Are there any industries that are doing very well? Are there any industries that are struggling? What's going on in Ecuador?
Sure. So I think we can talk for hours about this. We want to try to make it an interesting summary. So Ecuador got dollarized in 2000. We had a huge financial crisis between 1998 and 1999. At that time, we had the sucre was our own currency, but due to high hyperinflation and a huge financial crisis in the banking sector, where almost 40% of the banking sector was gone, the president at that time decided to adopt the dollar as official currency. And obviously that helped a lot, because that had an immediate shock in terms of controlling inflation, which was not under control. You didn't have the capacity to issue money, which basically reduces pressure on creating additional inflation based on expansion of the monetary balance sheet based on nothing, based on air, basically. That's what was happening before. And then the challenges in a dollarized economy, I would say, is that you don't have enough tools that you would have if you have your own currency in case that you have external shocks. So having said that, the dollarization of the economy has been great for financial sector, for the economy itself, and for every single Ecuadorian, which in relative terms is richer than it was before when we have our own currency. Obviously, that comes with limitations, and that's something what is happening now, and that's what I discuss now very briefly. But when you have a dollarized economy, first, you don't have a lender of last resort, right? So basically, the lender of last resort or a systemic bank is Banco Pichincha in this case, because it has almost 30% of market share, around 20% of market share on the loan side and the deposit side. So that bank needs to be run in a very conservative way. And that's the approach of the senior management and the main shareholder of the bank. They know the responsibility of the bank in terms of hedging and covering the economy because of the large size of the bank. So in a dollarized economy, what is also important is that to take a look continuously to the balance of payments, because at the end is the result of how many dollars you receive and how many dollars get out, right? If you have a net outflow of dollars, then the economy starts to shrinking, you have a liquidity problem, and then you don't have any capacity to issue money. So basically, the economy starts contracting, it starts decelerating. In the opposite happens when, for example, you have a very high oil price and you start receiving more oil revenues, the economy starts growing again. And that what creates is an economy that shrinks in growth, but not dramatically, not at the levels that are required in order to reduce poverty to more manageable levels. And that's the problem at the end. How to attract investments, because that's the other part of the balance of payments, in order to create more industries, more employment, and to have long-term growth that will reduce eventually the poverty level that is being important in Ecuador for several years. So that's, I think, very relevant. And now, when you take a look at what's happening now in Ecuador, when you take a look at the international reserves of Ecuador between the end of 2022 and 2023, it decreased by 50%, 50%, from 8 billion to 4 billion. If you compare, to put that in relative terms, if you take a look at the economy of Peru, which is an economy of $225 billion, the Ecuadorian economy is an economy of $110 billion, half of what is Peru. Peru has international reserves of around $70 billion. So the reserves that we have as a country are very, very marginal. We don't have one currency. We don't have a capacity to create more reserves with instruments. So we depend on the dollars that come from the balance of payments. In that situation, what has happened in the last year is that a couple of things. The first thing is that we have been receiving less financing from international counterparties than we received in the years before, specifically between 2022 and 2023. So the net outflow of payments because of debt service has been greater than net inflow of new financing, the first thing, and that accounts for 3 billion in total reduction with international reserves, contraction. And the second large component is the balance of oil balance. And Ecuador produces around 470,000 barrels a day of oil, which is a decent number, I would say, if you compare to the size of the economy. 70% of that is exported. But what happens is that we don't have enough industry in order to produce oil derivatives, which are essential to produce gasoline. So what happens with Ecuador is that you export oil barrels, and then you need to import the derivatives in order to produce the naphtha, the gasoline. And that balance has been growing negatively or decreasing over time, and that has created an additional pressure of $2 billion into the international reserves. So those two components are the ones that combined are creating the pressure on international reserves of the country. So at the end, again, you go to the basic equation: how many dollars you are able to get into the country, how many dollars are going outside of the country. Another important sector a couple of sectors, I would say more real sector, farm groups, agricultural groups, exports, mining, all of those sectors are the ones that are bringing net dollars into the economy, in addition to financial institutions, which are the ones that acquire financial indebtedness from DFIs or different counterparties. And in net, they have been bringing additional funds into the economy to put into the asset side and lending of the economy. So that equation, again, is a sharp reduction in international reserves. And now for 2024, just to close up this specific part, the government has already around $4 billion in arrears with local contractors. Since they didn't have enough money to pay them in 2023, they are carrying these arrears, delayed payments basically, into 2024. And they are looking for additional funding in order to cover this gap. And the government was successful, and this is, sort of transitioning now to the political part, because the current government was elected in October this year. It's a very new government. And the previous government, his initial term was 4 years, and they had to call for early elections because of political crisis. So we have a president for almost 2 years. We are going to have a president, the one that is now, for until May 2025, and then they're going to call again for elections. And so we're going to have 3 presidents in less than, 5 years, around that. And that creates a lot of uncertainty into economic actors, right? So you're not going to do a long-term investment. You're not going to do something. You're just going to keep your OPEX flowing in order to keep your operation until you have more certainty of what is going to happen. So under those situations, what the current government did, which was, I would say, successful, because they knew the crisis that was coming because of this lack of resources, lack of liquidity. They passed different bills and were approved recently, a couple of weeks ago, in the assembly, which basically increased the value-added tax from 12 to 15%. They created a one-time contribution from financial institutions, which is going to create additional $150 million in funding for this year, and additional taxes. All of that is creating around $2 billion, which is going to help to reduce the gap that we were discussing before, but that's not enough. So the next step that the government is expected to do this year is to get or discuss a multi-year staff agreement with the IMF in order to open doors with other multilaterals. And that funding is going to help to close the gap to around 2 to 3 billion by the end of the year, from a gap that was 10 billion or a little more than that when we started the year. With that, you can push these arrears, payments in arrears that you have with contractors eventually to 2025 and keep the economy running and comply with your international obligations. Because another important thing is that starting in 2025, total amortizations of debt for international governments and capital markets, euro bonds, etc., start increasing because we defaulted in 2020 because of the COVID pandemic, and we restructure our financing so that we would have 3 years of lower coupon payments. And in 2024 and 5, it will start increasing again because we actually were preparing ourselves during these years in order to be able to serve the debt. That didn't happen. So now we need to enter into another agreement with an IMF and other creditors in order to be able to have sustainable debt over time. So that's where we are standing now. Very interesting, things happening here, and I just stop there.
Was one of the best overviews of economic situation in Ecuador I've heard. Is Ecuador one of the more free markets for banking in the region?
I wouldn't say that, and I can provide you a couple of examples. For example, you have caps on interest rates. Interest rates are not moving freely based on supply and demand, and that has been the case for the last, I don't recall, more than 10 years. And in the last, we'll say, year and a half, when the deposit rate started increasing a lot based on two things. The first thing, the international context. Obviously, interest rates were going up everywhere in the world. And the second thing is what we were discussing before, the balance of payments. That effect of having less liquidity and liquidity crunch, creating a lot of pressure for the available dollars in the economy, and banks started increasing deposit rate, term deposit as well, especially by the beginning in mid-2022. And that's where deposit rates started increasing a lot. And when you have the cap at the same time in the different segments, the margins started compressing very much. So in that moment, I would say 6 months ago, a year ago, the regulator decided to start updating based on specific rules, the different market caps that they were fixed for several years. The second thing that I want to add to your question is we don't have a robust capital markets in Ecuador. It's very, marginal. It represents 10 to 12% of GDP, the total turnover of the capital market in Ecuador. And imagine that this is a $110 billion economy, and we have two stock markets, two in the different cities, one in Quito, one in Guayaquil. Not in Brazil, I don't recall, you can tell me, but in Brazil, I don't know if there's one in Sao Paulo, one in Rio, or it's just one.
It's all consolidated now, it's all B3.
Okay, here is not consolidated. So those inefficiencies create that these markets are not robust, they are not big. And for example, there is no way to hedge or mitigate interest rate risk. So if you want, for example, a customer to provide a long-term funding with a fixed rate, that market doesn't exist here. You will price at a variable rate, which is based on the deposit rate plus a margin, and you will keep updating over a year and a half. That's it. And then you need to, again, review terms and approve a new credit line. So the long-term financing, which is essential for economic sustained growth over time, doesn't exist here, right?
Yeah.
So you don't have capital markets to use hedging instruments, and you don't have, a flexible banking system in order to allocate funds efficiently. And you have an increase in deposit rate, which start increasing the margin of financial institutions. Then you have an issue there that you need to solve promptly.
I'll ask you, because I've tried to do research on Ecuadorian stocks, and I've been on the sites of both the exchanges, and I have a hard time even finding the financials for what companies are still listed anymore. So if investors do want to look at the equity markets in Ecuador, where should they go?
Well, there are a couple of large brokerage houses here, and I know that I'm not in that specific market again. I'm more in the banking industry here. But I know for a couple of investors that have work in access to specific securities, there are few issuers here, few active issuers. But I know that a couple of ones that have invested in some securities, there are a couple of local houses that will provide some services. And there are some regulations that would incentivize international investors to invest in security in Ecuador and to provide them some exemption from some applicable taxes that you would normally have. For example, one tax that probably you don't know about this is one that is called external remittances tax, which is basically any dollar that you send outside of Ecuador offshore has to pay, as of now, 3.5% flat tax. So that's crazy, right? And that's an external remittances tax, which means at the end, that's also an internal restriction, because who is going to put a dollar in Ecuador if the next day you're going to receive less money on that dollar? But for international investors, coming back to the potential investment for, international investors, there are specific regulations that would allow them to invest, and after a specific period, which is, I think, 180 days, they can take the money out of the country without paying that tax. So there are certain incentives so that some investors can get into the economy and make some investments. And I think, the best way is just to contact a couple of local brokerage houses to provide some insights on that.
Are non-residents, can foreigners bank in Ecuador? Can I open an account with Banco Pichincha, debit account? Yeah. But it would be useful to me domestically only, because if I were to use that debit card in the United States, I would pay that 3.5% flat tax.
If that is going to be debited from your account in Ecuador, yes, that is going to happen. Even though there are certain quotas, it's called. So you have a certain amount of total expenses that you can do with your credit card, and that exempted. After that, you're going to be charged a 3% fine. So there are a couple of nuances in the law that allow you to, move a couple of things, but the general rule is 3.5% applies on every offshore transfer.
Great. So I want to go back real quick to the dollarization point, because you mentioned the regulator capping interest rates. And one of the things people say about dollarized economies is they import the United States monetary policy. But it sounds like there's a regulator between U.S. monetary policy and Ecuadorian financial markets. So is that correct? Is it U.S. monetary policy with Ecuadorian regulations on top?
Yeah. So at the end, what happens with us is that we use the US dollar, but we have our own monetary policy in terms of rates. That's true. So it's a combination of, we use if you come here, you will see exactly the US bill, $50 bill, $20 bill, exactly the same way. But in terms of rates and in terms of measures of, capping interest rates, the deposit, the methodology, everything, that's local. That's an interest rate based on local US dollars. You want to see that, even though the bill is exactly the same way.
What's the name of the regulator that controls that? So if it's not a central bank, or do they call themselves the central bank?
There is one that is the Central Bank of Ecuador, obviously, but it has limited responsibilities because they don't have the issuance capacity, because, there's a dollarized economy. And then you have, for financial institutions, the Superintendency of Banks, which is a very important regulator, which is, and you have the information about financial institutions in loans and savings of Ecuador in very detail. I think one of the information that is most detailed, if you take a look at data of Ecuador, the ones on financial institutions, because they are extremely regulated, extremely well regulated, and they provide every single insight, and they just also control, they are very conservative in the way they are managed. The other institution, which that is also important, is the internal IRS, which is called SRA, which is the tax authority at the end, which is, we have also a strong relationship because, all the transactions that we do, etc. We have a lot of monitoring from them as well. So basically, central bank, Superintendency of Banks, and the internal IRS, the three main regulators that we face.
Great. So what should international investors then be paying attention to moving forward in Ecuador? You mentioned the presidential election in 2025. Is there anything else in the near future that should be on investors' radar? Yeah,
I think there are different sectors, exporting sectors are doing really well, like, typical shrimp, banana, cacao, and products derived from fish products as well. So those sectors are the ones that are creating a positive inflow of dollars into the economy. That's very important. So there is a lot of investments going on there, or a lot of investments, considering the current situation. But also what is important is that all those bills that were passed by the president, Noboa, which is the current president, in the last weeks, are very positive. And you can, if you take a look at the Euro global bonds of Ecuador, you have maturities of 2030, 2035, and 2040. They are priced in Bloomberg. 2 months ago, those prices were in the recovery value, like yield to maturity above 22%, 23%. So completely recovery value. After a couple of measures taken by the president, the ones that I just mentioned that is going to help him to recover or to capture like $2 billion in additional revenue. And in addition to controlling security issues, which Ecuador has been in the news for the last months because of the riots in prisons, because of different murders, because of the drug lords controlling certain parts of the country. President Noboa has been able to, well, what he did, actually, he took the military out to the streets, and they provide them special powers in order to take control of the security, joining the police force. The police force was not able to control that anymore. So that feeling of security has improved a lot in the last month and a half, 2 months. I mean, all of this is a very recent story because President Noboa just took over the office in October. But all of that is creating a much better sense of security, of things are getting back under control. This is not going to be, completely under control as eventually Colombia was in the 80s. So the first things that we saw a couple months ago of the drug lords fighting on the streets and killing people were eventually things that happen, and eventually they are more under control. And that allows more for a transition into focus on domestic issues related to the economy, to agreements with the IMF, to getting back to the capital markets, because you now have yield to maturities of 17%, not 23%, which is basically you are not able to issue more debt. And I think those conditions create a more sustainable path eventually, first for the economy, and second for him, President Noboa, to be reelected eventually in May 2025, which is crucial because you want to have some, continuity of the policies he's making now. And at the end, even though it could be a great president for some sectors or not such a great president for other sectors, at the end, part of democracy, my point of view, is you need some continuity. And after that, another one comes. And even though it could be bad or good for one specific sector, you exactly know what is going to happen and you can take long-term decisions. And that's what doesn't happen in this country, or happened in this country in the last 6-8 years. So getting back to that, if that happens, what is going to be important for investors? Because we're going to have some continuity in the policies of the country. We're going to have a reduced fiscal deficit. We're going to have all these payments in arrears that the government has now because of lack of liquidity. They are going to catch up, and that is going to create some opportunities in the liquidity is going to improve as well. So I think there is a good path forward for a better conditions, what we are currently now. And I hope that this is going to happen as well.
Interesting. So I marked it down here as a bonus question if we had time, but you mentioned the shrimp industry. And if you don't have an answer, it's fine because I didn't ask you about it. But I'm so curious because I think most listeners wouldn't associate Ecuador with shrimp. But
Really?
It's a huge industry, one of the biggest exporters in the world. So can you know, why is Ecuador so competitive in shrimp farming?
I think it's also, I'm not expert on that. I have a colleague at the bank that is very good at all the, shrimp industry. I can introduce you if you want to talk to him sometime.
But it'd be so interesting.
Yeah, definitely. He's very well on that. We have a specific, that's important. At the bank, we have a specific agro-industry unit that specializes on funding to that specific sector, which is completely different sector. You need to understand the risk, the cycles, and the terms that need to do. So
I think after petroleum, right? Is it Ecuador's second or third biggest export? Maybe it's a huge industry.
Yeah. Yes. It's I don't have the data now with me, but it's a huge industry. Again, happy to put you in contact with my colleague.
I'd love to interview him. Yeah, I'd be interested to talk for sure.
Sure.
So what do you think? Do you want to talk a bit about the diversified payments rights before we cut off? So maybe do you want to explain then a little bit about what's going on with the credit markets in Ecuador like we talked about before we interviewed, and then what you were working on when you were the head of capital markets with the diversified payments rights?
Yeah. So the diversified payment rights is a very interesting structure. It is a financing structure. It's not actually a product. It's a financial structure, especially for emerging markets. And why is that? Is because if you think about, any financial institution in Ecuador or Colombia or any other country that wants to access international investors will take a look at the sovereign yield curve and say, okay, at least if I want to invest in Ecuador, I'm going to ask that return, right? Otherwise, it doesn't make sense. Why I want to invest something that is less than the yield to maturity of the current bonds, euro bonds? That's the first reference. Or the MB, the Emerging Market Bonus Index, which is basically the risk premium over risk-free rate. So what this diversified payment rights creates is, first, what are diversified payment rights? Those are the flows that come from other countries in the world into Ecuador due to different reasons: remittances, individual remittances, capitalizations, payments for exports, whatever dollar that goes into the economy with a beneficiary in Ecuador, that's a diversified payment right. That's the first concept. So when you get those funds and you get that as a liquidity in the bank, and you get a financing from international institution, what you would normally do is use part of the liquidity that you have and pay directly from your account in Ecuador to that specific institution in abroad, whatever institution that is. But that includes the country risk, right? So what this structure creates is, okay, let's create an SPV, special purpose vehicle, which is outside Ecuador, right? So you basically take out the cross-border risk. What happens there is that SPV will provide a financing directly to the bank, and the source of payment of that financing is not going to come directly from the Ecuadorian economy, the financial institution, but directly from the SPV, which is capturing the flows outside of the country. That's the beauty of this. You eliminate the country risk by doing that. And what you do, you access better conditions, reduce spreads, risk premium spreads, and also you access investors that otherwise wouldn't even look at Ecuador because they cannot accept the risk return conditions based on it being exposed completely to the cross-border risk. I think one additional feature, an important thing of that, is that if you have the country ceiling, for example, Ecuador is CCC+. With that structure, you can get 3 or 4 notches above that. Imagine what that is.
Investment grade.
Not investment grade, but you get to double B plus, something like that. But imagine what that means in terms of spread compression.
Interesting. It's an interesting product.
Yeah, I mean, very helpful for countries in emerging markets.
You can see why it's useful, for sure. So I want to be respectful of your time. So where can listeners follow you, find some of your work, learn more about Banco Pichincha? Give them a send-off.
Well, there is the official webpage of Banco Pichincha, www.pichincha.com, bancopichincha.com. And also on my page on LinkedIn. From time to time, I post interesting things about the economy, about the events that we do with customers, about markets. And so happy to find any question, any follow-up, or any suggestion, whatever. Happy to provide more information.
And I'll put your LinkedIn and the bank's website in the show notes if listeners are interested. So thank you so much for doing this, Esteban. It was wonderful. I really appreciate it.
No, I enjoyed that a lot, and I hope that all the information I provided was useful.
It was great.